Hey guys, hope you're all well. I've just finished marking everyone's outcome tasks. Thanks for submitting them. I've re-uploaded your tasks, so your comments will be found on the document in the teacher response section on Compass. Okay, so please check that. I thought I'd just go over a couple of little things. So. Justin Bevan is the owner of Just Bikes, a shop that sells various types of bicycles. Okay, so this part's important um, because he uses the first in, first out method. Okay, another important step, and general ledger accounts for each accounts payable and accounts receivable. Okay. As of 1st of November, the GST clearing account had a balance of $450 credit. Okay, so that'll be important later. All right. Then during November 2025, the following transactions occurred. Okay. Blah 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 blah. Then we get to questions. Suggest one reason why Just Bikes may have decided to use the first in, first out method of inventory valuation. Okay. So why use first in, first out? Okay, so one, cheaper, two, less time consuming. Okay, so it was just asking for the costs versus benefits. Okay, of using identify. Oh, whoa, what have I done? I messed up my pen. Oh, because I'm going off the document. Okay, so the cost and benefits of inventory. Right. Now, then, okay, next thing we're going to do is record. Whoa, that's a thick highlighter. This is fun, isn't it? The appropriate transactions for November 2025 in the inventory card for Predator bikes. Okay, this bit's important. We're only dealing with every stock item has a different, inventory item has a different account. Okay, a different inventory card. So this is only the Predator bikes. If we scroll back up to our here, okay, sold 6 Predator bikes. Okay, bought 10 Tourer bikes. So this one here, okay, not included because it's a different type of bike. Okay, so we need to be careful with that one. Then next one, paid EXP in full settlement. Okay, full settlement means that there's been a payment to the account payable. Okay, EXP cycle. Now this one here, there was $480 per item. There was 10 items. Okay, so it's 4,800 plus GST, so we've got a 5,280. Okay, then we needed to calculate a discount because 5, 7, and 60. Most people did this one well. Okay, so that was good. The one that was done poorly by most people was that they included this in the inventory card. Okay, so you can see here, invoice 67. Where is it? Okay, not in this inventory card because this is for the Predator item only. Okay, so just be careful of that. The purchase was done well, not including GST. That's good. And credit note 13. This is incorrect because of the change in the study design this year, so ignore that. So we had to use 2 items at 420. Okay, so this should be, make sure we put it in the 2 at 420. Okay, because that was the last price in the out column. Alright, so that was done pretty well. Then physical inventory card showed 19 Predator bikes on hand. Okay, so depending on what you had, you could get a consequential mark here. So if you use the first in, first out, so just took the first out that were the first in in the inventory card. So if we show you here, there was still one at 400, so that one was taken out. Okay, so as long as you followed that process, first in, first out, that was well done. Okay. Next one, record the transactions on the 11th of November and 23rd of November. Okay, balancing is not required. So this was done reasonably well. Just making sure again that debits always equal credits. Okay, so and full settlement meant there was a discount here of 5% times this. Okay, so well done to those who recognise that. And this one was done excellently by everyone. Okay, even if you got the wrong price on the inventory card, you get consequential marks if you see that CM. Okay. The ledger account was done really well with one common mistake, which was this one here. Okay, this one had a check number. Okay, that means it's bank. Okay, so that's actually a mistake there. So if you go back to the inventory card, okay, so they purchased with a check number, which means bank. Okay, so that's a cash there, so just be careful of that. Okay, so look for that source document reference number. Okay. Alright, the last question was, oh, that's gone onto the wrong document now, sorry. Explain. Okay, so we're going to explain question why the value of inventory on hand might have been different if the identified cost method had been used. Okay, so that was just, you needed to explain the difference between identified cost and first in, first out method. Okay, so the identified cost method would identify the actual items still on hand, and the first items to be purchased may not actually be the first sold. Okay, therefore, under first in, first out and rising cost prices, inventory on hand will always be at its highest valuation, as the newer, more expensive items will be left on hand. Okay. A lot of people got one of the 2 marks. Okay, so often what was missed was not explaining that the actual method and what it was. Okay, so this part here, the actual items would be identified, or not explaining how it would cause a difference in the valuation. Okay, so that's it, guys. We'll be doing this once a week moving forward. So yeah, just make sure you save the file on Learning Task with your name, and that'll be easier for me. And I'll try and get a bit better at using the video as well to explain things. But yeah, hope you're all well. Talk to you soon.